What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an excellent day today. Bitcoin and cryptocurrencies are in the red today. In yesterday's video, we were talking about the potential of a double top for Bitcoin, and we do have something right now in the charts that actually is a little bit scary. We do need to talk about that, but it's nowhere near as scary as what happened exactly 1 year ago today, which was the infamous Black Thursday crash. You can see Bitcoin over the pandemic scare actually dumped from about $7,900 all the way down to about $3,800 in about a day's time. So that was a scary, scary day for the market. Having a look at some of these prices though, my goodness, we had Ethereum $88, Litecoin $24, Cardano 1 cent, Chainlink $2. So Binance was $6.93. It was quite the discount, but it was also a very scary day. Now, having a look at what's going on right now, maybe we did have a little bit of a dip to celebrate the anniversary of that scare. Although you can see right here, though, we have put in a higher low, and a higher low. So in today's video, I do want to talk about something that is a little bit scary for Bitcoin, but I want to discuss why I think this could be the shakeout, the fake out before the breakout, and why Bitcoin could actually be heading to about $70,000 minimally as a target. So if that sounds good to you, you know what to do. If you are not subscribed, definitely consider it. And without further ado, let's dive directly into the chart. So having a look right here, Bitcoin has once again bounced perfectly off of this previous resistance turned support. You can see we had the resistance here, right here. We had it again right here just before we broke out. And currently, we've actually had two nice bounces right off of that level. So was this the fake out? Right now we have spoke about the potential of coming down here to the legacy trend, even back down to the low $50,000, $52,000. That is quite possible. There are some people that are afraid that we've actually had a bit of a double top right here and right here as well. Although you could argue that if we kind of ignore this center bump, some people have also been saying this could be a bit of a cup and handle formation, right? Which is where you do have a double top, then there is that fake out, and then we do have that breakout to the upside. So that is a possibility as well. And I showed you guys this diamond formation. We've actually retested the top of the diamond twice already, showing that the bulls are certainly in control. And interestingly enough, if we go from the peak of the breakout to where we had last time, we had about a 40% increase from $42,000 to $58,000. Now, I'm not saying that we're going to have the same exact breakout, but just for fun, let's say that we did actually break out to the top and we did have that 40% breakout. That would actually put Bitcoin's price target well above the $70,000 level we had spoken about, and would put Bitcoin nicely at around $83,000. So should we be getting excited right now? Well, having a look over at the futures, even though we are heading into the weekend and things could be getting crazy, we've had a lot of beautiful bounces right here between the $45,000, $46,000 level, which has arguably made this the strongest support for Bitcoin since the $11,000 level. So is that cup and handle in play? Well, let's have a look and let's talk about it. But actually, one thing I want to tell you guys about super quick is if you are trading on Bybit, they just today released their brand new inverse futures. You see right down here, if you come, you click this, and this is the, it's a little bit of a beta right now, but you can see by the prices, obviously 60,000, 62,000. So you're able to actually bet not the short-term price, but like what Bitcoin's price will be in a month from now, in 2 months from now, right? So check that out. Really cool feature. If you guys are interested, check out my Bybit tutorial popping up above. If you guys want to know how to trade Bitcoin futures, etc., things like that. Also, don't forget, $200 bonus, absolutely free. Check that out in the description below. But talking about what is happening right now, why did we have a little bit of a dip this morning? Well, the CFTC actually apparently is looking to investigate Binance right now, right? So they want to see if U.S. citizens have been able to trade derivatives on their exchange. Now, I don't use Binance, as you guys know, but I will be straightforward. They wouldn't let me trade because I did KYC, and you have to do KYC to trade. So as far as I'm concerned, this could just be a bunch of FUD, but CZ is getting on, probably by the time you guys are watching this video, he's doing a Clubhouse live stream to go over this today. He says there's no issue, it's just FUD, but that could have had a little bit of a reason, a little shakeout this morning in the markets. You know, people were a little bit concerned about that. Binance is quite big, right? The other thing that's had a lot of people concerned is that we've had Bitcoin whale wallets holding over 1,000 Bitcoin plummeting. Now, I did give you a few reasons as to why this could be happening. Maybe they are eyeing the altcoins, but you know what another pretty plausible solution could be? The fact that they're splitting bigger addresses into smaller addresses. Apparently, this is a requirement of some of the custody providers. So they could just be literally just sending the Bitcoin to 2 separate addresses, and then it's like, oh no, the whales are selling. They might not be. I mean, if you guys are using ledgers, right? I don't even know where my ledger is right now. But yeah, I mean, you know, it generates new wallets every single time, new addresses, but it's the same owner, right? So that could also just be a little bit of a misconception. But here's the thing, it's a little bit scary, and this was pointed out by Philip Swift. He says, do miners still have the power to dump the price of Bitcoin in a world where daily mined Bitcoin is likely a lot smaller than institutional buying? Discuss. Now, this is something we have not talked about on the channel probably in about over a year, but the Puell Multiple. Now, this looks at miner revenue today versus historical norms. And you can see right here, it's starting to approach this red band. Now, historically, when the Puell Multiple, which is this red line below the Bitcoin's price, breaches into the upper red band, it has coincided with major macro highs for Bitcoin price as miners begin to realize their gains. So the fact that we're getting very, very close to this red zone, does this mean that we should be worried about Bitcoin miners selling off? And is this potentially a top signal? This is a little bit scary. This is something we need to analyze. Well, I actually had the opportunity to check out this report from fund tracker Stack Funds. Now, they commented on this, and these guys obviously are a lot better at doing research than, you know, myself. I mean, this is what they do every single day. And they highlighted the fact that when you actually take the 7-day average, outflows from mining pools are actually at their lowest level since 2016. And I know what you're saying. Hasn't F2 pool been dumping on everybody? Haven't miners been selling? Yes, but when you actually look at the average compared to historical miner outflows, it is actually still relatively low. For example, in 2016, we saw outflows break below a long-term support level, which in turn preceded the bull run to 20,000 over the next 2 years. This occurred twice during the past year alone, in May 2020 and at the end of January this year. So according to them, the double break provides further affirmation that miners' outflows will probably continue to remain low despite the FUD, which could be a catalyst for even higher prices, which is why I said we could be seeing the shakeout fakeout before the breakout. I like that. I like that. It's got a ring to it. So with expectations of a further upside still in place, researchers also considered the potential floor of $46,000 at the worst, with that level forming Bitcoin's strongest support since it crossed 11K. And I showed you guys right here, if we go over to the CME futures chart, look at where we keep bottoming out. Literally $45,560, okay? In fact, let's see actually if we put the VPVR on over here. Where's that at right now? Okay, so that's at 47. So yeah, I mean the halfway point between 45 and 47 is 46. So there you go. That's absolute proof right there. You know, that's the situation. So that's one reason why it is a little bit scary, considering that we could be potentially getting overheated, but at the same time, it is very different. There are a lot less Bitcoin coming into circulation from the miners. We do have a lot of institutional interest, and as they said right here, the 7-day average is actually a little bit lower. So, moving on, talking about Ethereum, as I did say, Ethereum looked like it was bottoming out with Bitcoin. It's Bitcoin comparative, right? Ethereum's struggling a lot harder than Bitcoin. I still want to see us break this spider line right here, as CryptoFace would call it, right? Or trend line, as we've always called it. But yeah, I mean, the next level of bounce is around 1665. So if you are looking to trade, I would Not financial advice, but that would be the area for the bounce right there, 1665. In case it doesn't get down to that level, you could probably put it a little bit higher, maybe like 1685 or something like that. Obviously, guys, if you are looking to trade over on Bybit, once again, check out the tutorial. It was popping up above. I do have links below. You can also check out Femex. They do, for $10 actually a month, you get unlimited trading, no fees. So pretty incredible. I do have a tutorial. Check that out as well if you guys are interested. But the one thing that could spell some worry for all of the altcoins in general is the Bitcoin dominance. And I know we spoke about the potential of Bitcoin dominance falling down this legacy line right here. However, zooming in, if we do continue to break to the upside, it could actually be putting in a giant double bottom, which is arguably the most bullish pattern, especially when it comes to Bitcoin and cryptocurrencies. And if Bitcoin does start to rise again in Bitcoin dominance as price goes up, it actually will be difficult for the altcoins to keep up. So we are going to be keeping a very, very, very close eye on this Bitcoin dominance in the up and coming weeks. But speaking about Ethereum FUD, which happened yesterday, was the fact that some of the miners are actually protesting the EIP 1559. Well, now they're saying that this has potentially accelerated the upgrade to ETH 2.0, and it may actually be the catalyst that gets these developers to push ETH out a lot faster than we had originally expected. So that is definitely good moving forward. Also, I just wanted to mention this tweet from Timothy Pearson. He's over at Cane Island. I think it's Cane Island Alternative Advisors. Yeah, he said Facebook's market cap took 10 years to get to $1 trillion. Chainlink's market cap, $1 trillion in 10 years equals 3,000 per coin, which is a 10,000% return or 58% per year. Doable, no joke. Which is why we do have some Chainlink on the portfolio. In fact, my dad, funny enough, is a huge Chainlink fan. His portfolio is extremely weighted heavily for Chainlink. So, for my dad's sake, Chainlink, 10,000% return, right? But look, speaking about, these things, Chainlink made me think about oracles and how big Chainlink was when it came out, right? The idea of being able to connect and have these, blockchains connect with the real world, to be able to bring that data from actual real world, even centralized platforms into the blockchain world. And that is why I've been such a big advocate for things like Polkadot, interoperability, Layer 0. Another project that's coming out that I have my eyes on is Unmarshal. They call themselves the Multichain DeFi Data Network, and they're saying it's the easiest way to query blockchain data from Ethereum, Binance Smart Chain, and Polkadot, and also Solana, I believe, and you can see some of the other ones down here not implemented yet, but they're also looking at Elrond and Near protocol as well. So this is something that I'm definitely interested in. They say it's for developers, built by developers. It's a decentralized network of blockchain data indexers and transforming tools to power DeFi applications. So here you go. You have all the different blockchains. They feed into the indexing nodes, which runs through Unmarshal. And yeah, obviously you can have push notifications, WebSocket, APIs, really any way you can get data, essentially. Notification engine, DeFi state engine, API engine. Tax module, guys, token tax statements for any financial year. So I'm always interested in these types of things that are going to elevate the DeFi space into something that is more relatable, something that's actually, that we're used to. So that's why I've had my eyes on this as well. If you actually come over here, you can see that they say the economy will be able to leverage Unmarshal's solution to extract rich structured data across multiple chains. And, obviously we were talking about oracles. They say although oracles facilitate bringing off-chain data onto the blockchain, there is a prerequisite in creating a decentralized network to promote consistent access of rich on-chain data to DeFi economies. So they're aiming to provide this data through a decentralized network. I told you they're obviously multi-chain operable, structured data, comprehensive software as a solution, democratized governments, as well as automated indexing. So definitely going to be keeping my eyes on these guys as well. Once again, do your own research before this project isn't even out yet. So I do like to bring this to you before you guys even have an opportunity to buy. You can do research before, maybe get in early. Not financial advice, but something that is absolutely blowing everyone's mind lately is this NFT craze. So Justin Sun, it says he narrowly missed out on Beeple's record-breaking NFT sale. That's right, this collage right here, which represents the first 5,000 days. I guess it's all of his artwork that he did in his original time in one giant piece. And this sold for 68 million. It was 69 million, something like that. I don't know. Crazy amount of money. But yeah, like I said, I don't know. I guess, you know, beauty is in the eye of the beholder, right? Would I pay 69 million for this? Absolutely not. No offense, but somebody would. Justin Sun attempted to. But yeah, so NFTs are clearly here to stay, guys. But that is it for me today. Thank you so much for coming back to the channel. Let me know, what are you doing right now? Are you buying Bitcoin? Are you buying altcoins? Are you buying NFTs? What do you think is going to happen? Do you think that this is the shakeout, fake out before the breakout? Or do you think that we have double topped and we are going to be going a lot lower? Let me know what you think about that below in the description. And if you have not seen these videos that are popping up right here, right now, check them out. Until next time, stay crypto. And of course, peace out.